I think being able to use technology to monitor all your data for completeness, for accuracy, for integrity, all the things we're doing, it's a must. It's a must because when you have a single point of failure, it can always happen. And it happens. I think every week a company announces, like in average every week, like on a material weakness.
Are you a scaling SaaS founder? Ready to make the leap from leading a team to leading an organization? Join us each week as we refill your think tank with actionable tips and strategies from great business minds you know and those who don't know yet. This is SaaS Fuel with your host, 5-time entrepreneur, SaaS founder, and globetrotting adventurer, Jeff Maines.
Welcome back to the SaaS Fuel podcast, where AI-powered language learning means you can finally ditch the awkward charades and order your coffee like a local. I'm your host, Jeff Maines. I hope B2B SaaS founders like you grow from traction to scale. Here, growth is more than just numbers. It's about crafting a future-proof company, premium valuation, and leaders who build a business of significance while living epic, adventurous lives. How much is one mistake really worth? For Macy's, the answer was $150 million, and all because of a single employee's accounting error. Finance isn't just about keeping the books clean anymore. It's about safeguarding your business from risks hiding in your own data. One miscalculation, one oversight, and suddenly you're making headlines for all the wrong reasons. The real question isn't if mistakes will happen, but how you can prevent them before they cost you millions. Today, we're diving into the high-stakes world of financial data governance and automation, where AI and smart systems are stepping in to catch what humans might miss. We'll talk about how CFOs are adapting to a new era of financial management, why talent shortages in accounting are making automation more crucial than ever, and how businesses can avoid their own Macy's moment. If you think financial controls are just a back office issue, think again. Your bottom line and maybe even your company's reputation depend on you getting this right. So let's get into it. Our expert guest last Thursday was Yulia Gurinko, an influencer marketing expert at Mishka Agency. She shared how she's helping SaaS brands like SE Ranking, Hack Chinese, and Unicheck scale their influencer campaigns from 0 to 8 figures. How about that? I didn't even know influencer marketing was a thing in SaaS until we first met. But Yulia broke down strategies for authentic partnerships, creative campaigns, and measuring real ROI in influencer marketing, which I didn't know you could do that either. Our founder on Tuesday was Casper Tourneau, CEO and co-founder of QuestionBase. Casper revealed how his AI-powered Slack bot transforms team chats into actionable documentation. Amazing stuff. Think about that. Everything that happens in Slack, your documentation. Casper discussed the challenges of balancing entrepreneurship with family life. That's a big one. And the evolution of leadership through resilience and the power of AI in simplifying workflows. Very, very cool stuff. If you missed either of those episodes, go back and give them a listen. There's so much good stuff in there. My guest today is Ahikam Kaufman, co-founder and CEO of SafeBooks AI. A seasoned technology executive, Ahikam has a deep background in fintech, SaaS business operations, and corporate finance. But his real expertise lies in scaling businesses globally while leveraging automation to enhance financial accuracy, data governance, and operational efficiency. Welcome, Ahikam Kaufman. Hey, Ahikam, welcome to SaaS Fuel.
Hey, thank you for having me. I'm looking forward to our conversation.
I am as well. Today is all about finance, data governance, and the future of the financial role in organizations. Tell me a little bit about SafeBooks and how you came up with the idea and why SafeBooks versus other solutions out there.
Yeah. So the way we look at the office of the CFO, you really have three interesting layers. You have a data layer, you have accounting operations layer, operational layer, and then you have the reporting layer. And really, the residents of the office of the CFO, the staff members, the team members, and being one for many years, we'll mostly focus on the accounting layer or the operational layer and the reporting layer. Operational means like paying the bills, collecting, billing, making all kind of accounting decisions, and then the reporting is like how we report that to the management, to the board, to the street, and so on and so forth, right? And we really, in order to achieve all of that, we heavily rely on the integrity of our data, right? But most of us, as finance people or accountants, we're not data experts, right? And
Right.
we rely the data to be correct. However, today, the when you look on the kind of the topology of the Office of the CFO data network, it's the data is dispersed across many systems. And mostly for me, being in tech for many years, if you think about a tech company, then it's even more complicated, right? Because it's a combination of companies' own systems, which generate the business typically, and then all off-the-shelf software to process billing, payments,
Right.
the ERP, the ledgers, and all of that. And the question is, what's our ability as accountants, as finance staff members, to be able to really validate and substantiate all the underlying data? And I think the simple answer becomes like we really can't, right? Think about a company who works with, I'm just for illustration purposes, a company who works with small businesses, or they work with consumers, or they work with a large set of customers, and then the billing processes are really huge. Obviously, if they have, let's say, a marketplace, or they have a lot, just a big operations, and their bill pay is huge. And then how do you make sure all the data is captured correctly? And not only that, because it's financial data, it's also money. So how do
Right.
you avoid leakage, right? How do you make sure you collect all your invoices, you don't pay your bill twice instead of once? And just all the data is in the right place at the right time, right? Because for accounting purposes, the data needs to be in the right place. For example, R&D is different than G&A, different than sales, different than marketing, and in the right time, in the right period, right?
Yes.
So you will be able to make the right accounting decisions and the right reporting decision. So a long time ago, everything was manual, and now today, these days, think about a company who processes millions of transactions every single month. How can you monitor all of that? So that's how we came to think about SafeBooks. And not only that, you can't check everything manually. Even the stakeholder in this world, which are the auditors, right? Every company or every large company has auditors.
Right.
The business of the auditors is to make sure that your financial reporting is as accurate as possible and reflects the situation of the business. And for decades, they actually for centuries, the audit profession has been relying on data sampling, right? And the assertion was we can't check everything, so we're going to sample it, and we're going to assume that with a combination of sampling and random checking and conversation, we can figure out whether the data is correct. Now, today, it's not relevant anymore. Using technology, using AI, we can actually validate and substantiate every single transaction, whether it's like a billing transaction, a payment transaction, a payroll transaction, so on and so forth. In being inspired by other parts of the enterprise which have been adopting automations that help them do end-to-end monitoring of the data, I thought why it couldn't be done in finance. And I think now it's doable. Again, using AI, you can monitor all the transaction. What's the ROI? What's the benefit? The benefit is, I think, three or four pillars. You can reduce a significant amount of manual work, which one is very repetitive, is very tedious. People don't like to do it. And two, they can make mistakes. Three, it
Yes.
like costs a lot of money, right? Then you can avoid leakage. As we said, because we're dealing with financial data, it's actually money. Every time you make a mistake, it's not just a data mistake, it's a money mistake, right? So you can avoid that. The third pillar is compliance. If you're a public company, if you're getting ready for your IPO, you also need to do this. You also need to validate and substantiate your data because that's what the law requires. That's what the audit standards requires.
Yeah.
And now you have the ability to do it across 100% of the data. So I think the opportunity to make you feel comfortable about your data, right? Trust your data better, reduce the manual work, increase your compliance, save money in the process, maybe save on your audit fees. It's a cry for automation. And I think we're in the right time to do it.
I love that because as companies grow, they definitely get a lot more complex. And I think you think if the company doubles, that complexity probably doubles. And I think it's probably more exponential because you got a bunch of different data sources. So you may be using just thinking things that's used in our current company, SaaS company, or previous. NetSuite, you got your bank, you've got the billing system, which is probably different than the accounting system. You got a CRM. It's that's processing things, and so deals are going into the CRM, and somehow they get to billing. You've got payments that are being processed. You've got expenses, payroll. There's so many different data sources coming together, and data compliance is a huge deal. One, to make sure that everything actually syncs up, and so you don't have different numbers in different places, which happens, and then to be able to report that and be able to make decisions on it. But just the audit component alone, besides compliance, is so huge. Just that you can actually look at every transaction, not having to rely and hope that if something is awry, that it's caught in a sample.
Plus, you got it absolutely. If I couldn't agree with it more. Plus, I think you have two other factors which are interesting to consider. As a CFO, as an audit committee member, as a CEO, the first thing is that accountants, unlike, I feel again, I'm coming from the technology world, so spent many years in public tech companies, so that's my almost neck of the woods, so to speak. So when you think about, for example, tech companies, which sometimes are growing very fast, so they're experiencing a rapid growth,
Right.
and that's where the problem starts to happen. So when you think about accountants, unlike other parts of the tech company, they're not as tech savvy. And I don't want to offend anyone in terms of they're not like developers, they're not like
Sure.
security experts, right? So unlike maybe DevOps, unlike engineering, unlike this office of CISO, where people there are technically capable of accessing data at all levels and creating heuristics and creating automation or using tools. As accountants, we're mostly focused on the business data. We're not
Right.
focused on the plumbing, right? So there's like a gap, there's a hidden gap between the where the accounting needs to focus, which is on the operational layer, the reporting layer, and when he wants to actually, and where he should be concerned about, which is the data layer. I'd like to think that part of what we're doing, we are watching your back in terms of making sure the data layer is correct. The other interesting thing I wanted to bring up and mention, over the last year in 2024, you can find online tons of interesting data about talent shortage, accountant shortage. For
Yep.
whatever set of reasons, hundreds of thousands of people, meaning you see the talent is shrinking and you see less and less. Sometimes I meet companies. I met a prospect yesterday. You can see chief accounting officer at his mid 60s. I think there's a reason for that because you really suffer in the accounting world from a short of talent. Maybe a lot of people go and learn engineering, right? They prefer to be either
Yeah.
techie or today you have way more professions than you had before. Maybe you want to be like a YouTube contributor, right? There's way more
I
interesting
was thinking
things
the
to
same
do.
thing.
Yeah.
Yeah.
All of a sudden, you're watching at a pool of talent which is constantly shrinking. You've got all this data to monitor because, as we always say, compliance is not optional.
Right.
And from the other hand, now you have like technology you can use that can actually save a lot of save you a lot of manual labor. So I'd like to think that the combination of accountants naturally having limited access to the data plumbing, plus the fact that you can't hire enough accountants to even throw bodies at a problem and just cover
Yeah.
it with more extra manual work requires or will create another significant trigger for automating what we're focused on or what we're talking about today.
There's definitely a talent shortage, and some of that has been solved by offshoring accounting or bookkeeping. But yeah, even with that, there's still a talent shortage, especially as you progress and get more sophisticated. How do you see technology and specifically AI playing a role in mitigating the effects of the shortage?
Hmm. We can probably talk about that whole day, and you'll
I'm
probably be
sure.
more expert than I do because I think in your work you're exposed to so many more good ideas than I am. But I'd like to think the following. In the accounting world, if you think about these layers I talked about in before, the data layer, the operational layer, and the reporting layer. In the operational layer, a lot of the stuff you just mentioned, a lot of the work that was offshored is mostly around document processing, data processing, right? So that would be AP, AR, billing, payroll, things like that. I think to a large extent, the large language models are fairly equipped, especially if we saw now that a model can train a model with DeepSeek. So you
Yep.
can definitely make them better geared towards document processing in accounting. So I'd like to think that a lot of the work that has been offshored could be now automated using AI. Because AI is highly geared towards being able to understand a document, pull out the relevant information, and inject that into a system. So I think that's one huge area in data processing where we're
Yes.
going to see a lot of automation replacing. I'd like to think that with all the compliance related decisions in the reporting layer, right? When, let's say, the chief accounting officer and his staff, they need to make accounting decisions about leases, about rev rec, about expense, about acquisitions. I don't think that will go away. But the manual work here, it's like a judge work. It's a judgmental thing. You have to apply a judgment. You have to document your decisions. I don't think that's going to go away. But I'd like to think that when you free up the time of the team to focus on that quality work as opposed to
Yes.
the quantitative work, which is data processing, document processing, or at the data layer, what we're doing, like the data integrity, then they can really focus on the things they can do best, right?
Yes.
I think that if you think about automation, it's mostly around data and document processing. And we can talk about other things. Obviously, you can use technology in financial planning analysis, which is already happening. I don't know if it's necessarily AI, but it's just technology for easier and better modeling. Although I gave up on the notion that we're going to get rid of Excel or spreadsheets, right? It feels like it's there forever. And we actually leverage that at SafeBooks. But I think document processing is a huge toll on the business in many aspects. In companies, it could be also things around customer support. So it has many faces. But if that would go away successfully, then I think we freed up a lot of the manual work in corporate finance. Then I
Yeah.
think what we're doing, which is all about, you want to be careful in finance because, as I said, the accounting decisions are going to stay, I think, with the accountants. But the ability to check the data and to validate the data using AI is the second largest opportunity. I'll tell you why. Because the risk in data processing in accounting is that machines can make mistakes. And when you
Yeah.
ingest those mistakes into your ledgers, it could be problematic. But when you use AI to just check the data, we're like a read-only system. Worst comes to worst, we pointed you in the wrong direction. We told you to look at something, but it's okay.
Mm.
But chances are that if we pointed you in a direction, then there's something you need to check. So our ability as a system to have only read-only access and validate your data means that we never inject the wrong data because we don't ingest data. We don't inject data into your systems, but we can leverage AI to constantly seek anomalies and patterns and also apply controls, which will check your data to make sure that whatever was done, whether it was done by team of offshore accountants or by data processing automation, is actually right. So we're like your control arm versus your operational arm. So I'd like to think that in the near future, another interesting thing would be, in accounting, again, you have two layers or three layers. One layer, you need to process the data. Let's say you signed a new lease, right? Then you reflect all the financial terms of the lease in your accounting based on the invoices or whatever. But then accounting pronouncement, as we known by like US GAAP or whatever, may require you to treat the numbers differently. The
Sure.
ability to use AI that knows the US GAAP to check your data, whether the accounting implementation or accounting decision when made correctly is another opportunity even for us, right? So the ability for us to have a model that will know the US GAAP, all the literature, and will be able to check the data, not check the data integrity level, check the accounting decisions and make sure they're correct, then that would be an interesting opportunity. Another opportunity overall in finance is around taxes. Think about the tax code,
Yes.
how complicated it is. I'm sure that every company, every large company has to, as part of its close process, they have to calculate what it's called a tax accrual, right? Which
Yep.
a tax accrual is a reflection of the liability or the asset. Whether you have a loss, it's an asset. If you have a profit, it's a liability. And to be able to calculate that correctly, having all the global operation companies have the subsidiaries, it all needs to roll up in a certain way. So being able to understand the tax code and understand the calculation and automate some of it could be also a huge opportunity in the office of the CFO. So there's a
That's
lot of work to do.
Yeah, that's really big to think about that. One, document management, like you said, it's come so far where it wasn't just a few years ago, we we're doing, optical character recognition and saying we're looking for this and then, pull the address or name or something from this part of a document and this part, especially in healthcare, trying to get records electronic. And now AI can look at a document and it's much more accurate and understanding not only the data that's there, but also the context around what that data is and where it should go and how it's treated. So it recognizes forms now, where before we were trying to teach systems what those forms look like and where to expect certain types of data, which is just so far advanced from where we were just a few years ago. It's pretty amazing.
I
And
want to
the gap
be,
compliance.
yeah, I want to be really cautious. I think AI will far exceed that. I think if you ask my personal opinion, it's not the topic of the day. I know, and I apologize for that. I think in 5 years, before talking to a doctor, you will talk to an AI machine, and based
Yes.
on your rhetoric and symptoms, it will be able to at least say whether you're an urgent case or maybe you can come back in a couple of days,
Right.
to prioritize. But I think in accounting, everything you just said, document processing, in 2 years, it's gone. Because the ability to not just read structured data, but unstructured data, right? I get a
Yes.
document, I get a vendor invoice. I don't even know how to expect. Maybe it's a new vendor, but I know how to look for, as an AI, how to look for the date, for the amount, whatever. Maybe I can read the purchase order or the contract and make sure it comply with the terms, right? All these things
So
around.
important.
Yeah, go ahead.
It's so important. Just contract terms, making sure that billing and contracts match. There are people who do that, and again, it's a sample size, and you hope it's right. And again, the bigger the company gets, the more complex that becomes. Or there are the shady companies out there that just send what look like bills, but it's like for subscriptions or other things, or a lot of things around domains. They'll send it into billing and it looks like a bill, but it says this is not a bill. But a lot of times those are processed anyway because it just what it looks like and people are just doing their thing. AI can catch those or catch anomalies instead of just sample sizes. You're right. Just document processing alone. Um, so
I'll
much.
tell you this, Jeff. First of all, we're doing it already.
That's
So
great.
hopefully I'm preaching to the choir, but I'm trying to preempt the discussion here. But we are actually doing it today, and the ability to validate every single document, let's say an order form, and also to save the manual work because people are actually doing it today. I think it's when you talk with company, it almost feels like to the future, but it's like we're doing it now. We're doing it today. So I think it's really an amazing period, and I think this is considered the low hanging fruit. And then there's all the complicated stuff about gap or taxes or other
Yes.
things we can do. Definitely on the validation side, because I'm trying to be careful. In the office of the CFO of a public company, using AI to inject data to systems could be still a little bit dangerous. But our ability to check the data, 100% of the data, across all documents, across all systems, there's almost no downside to that, right? The only downside could be that maybe we have a 5% chances of false positive, meaning pointing to you at something which may turn, but then you can give us that feedback, the model trains itself, and then we don't look at that again. So we only look at the stuff which you confirmed as like stuff that requires remediation. So I think that's like a big change.
That's really important. I remember a few years ago in a potential acquisition, part of the agreement in the acquisition was you certify that everything that you're doing in accounting is GAAP compliant. And I'm reading that, and it's probably, I hope so, maybe that's the accountant stuff. I don't know. And so then you push back on something like that. Oh, what you don't understand your numbers, you don't believe your numbers are correct. No, that's not it. But there wasn't a way to validate that. Gap is massive. How do we know? And so to have a tool like this to be able to go in and be able to say, hey, it actually is compliant, and here's how we know it's compliant, whether you're private or public, is huge. And really being understand what those numbers are, what they mean, and that things are done right, just puts you a level above other companies that are still doing it best guess. Ready to future proof your company and scale to new heights? Dive into the ultimate resource designed just for SaaS founders and C suite executives. Champion Leadership Group gives you an unfair advantage in scaling up revenue and outwitting competitors. Imagine solving your biggest scaling headaches and hitting 5, 10, 20 million ARR and beyond with ease. We take away the guesswork and the grunt work and replace it with framework by supporting you with our on demand fractional C suite team, a powerful operating system built into software, and a thriving community of fellow scaling SaaS founders. That's how we make it happen. If you're stuck at your current revenue level, this is your ticket out. Feel like your company is the world's best kept secret? We amplify your success. And hey, if you're already crushing it but too busy to breathe, we got your back. We'll free up 20% of your time in the first month. Now is the time to upgrade from traction to scale. If you're ready to work smarter and not just grind harder, schedule a 10-minute growth brainstorm. Completely free, not a sales call. You can't buy anything on there. And we will pinpoint the number one thing blocking revenue. Visit championleadership.com. That's where leaders evolve and companies transform.
I'll tell you this. I think what's interesting, and I hope it's okay I bring it up, but you know, the what SafeBooks is trying to solve, which is like automating your internal controls or automating your financial data governance, is something that I don't know if companies pay enough attention to. So they would think they have APIs between systems and that the staff members, they're doing a bunch of reconciliation, manual reconciliation, end of month, end of
Yeah.
quarter. But it really comes to the fact that first people make mistakes, then they may not do everything they're supposed to do because of lack of time or other time pressure. I don't think any close process is fun. Then you have the auditors and all of that. And what we've seen, which was really, really interesting, I think really a learning experience for the industry. And I don't know if how many people paid enough attention to that. I think it was 3 months ago, almost 3 months ago exactly, where a large company we all know called Macy's, they're
Yep.
about to announce they're about to make their earnings release, and then the same weekend before Thanksgiving, they say they're going to delay their earnings release due to the fact that a single person in their entire finance organization, a single person was miscalculating their freight accruals, causing them to understate their expenses by $150 million. So the
A
result,
little error.
a little error. But I think
Yeah.
we all make errors. What
Yes.
to me was fascinating, if that's the appropriate term, was the fact that it was a single person, right?
Yes.
Meaning you're as weak as your weakest link, right? Now,
Yes.
if you take the best CFO in the world, the best chief accounting officer in the world, the best corporate controller, again, we're all human beings. We all make mistakes. How can you be responsible for a mistake of a single guy in finance? A single guy, that's what they reported to the SEC. And
Yeah.
you can't. You can't. So unless you use automation to help you validate and substantiate all your data, then you eventually a mistake will happen. Now, the sad thing about these things, when they happen, no one thinks that making mistakes is legitimate and mistakes can happen. You still delayed your earnings release, and it
Right.
was supposed to be like a special one because of the Macy's parade and all of that. They initiated like a special investigation. It's going to cost you an arm and a leg with the auditors, with the SEC, with other corrective activities or whatever. Maybe, God forbid, can contaminate your resume, right?
Right.
For no reason, because someone made a mistake. I think being able to use technology to monitor all your data for completeness, for accuracy, for integrity, all the things we're doing, it's a must. It's a must because when you have a single point of failure, it can always happen. And it happens. I think every week a company announces, like in average, every week, like on a material weakness. When we
Yeah.
started the SafeBooks, one of the data points we had was a paper from PwC in 2023 and a paper from KPMG saying that up until 2021 or 2022, more than 50%, so every second company who got to the IPO, they had a material weakness. So every second company did not have good enough controls. And what I was starting to say
Wow.
in the beginning, when we try to run the office of the CFO, they're teaching us to think about US GAAP, okay, to make decisions on the data, but above the data, not to validate. They talk to us about systems, about account US GAAP, FP&A budgeting, thinking strategically, meeting compliance requirements. But the underlying data that we all rely upon, that should be captured, processed correctly, in the right time, in the right account, in the right place, with the supporting documentation, this is all like thin air today because we're not using automation to validate it. So we're doing all the work above, but the work below at the engines room is, I think, is deficient. And it's deficient because there's a gap between the accountant capability to check the data. He's not like a data analyst, but the data is data coming from
Right.
billing, from yeah,
Yeah.
yeah.
Well, Macy's is, I think, a fascinating case study. A financial mishap, and that's an accident. Other ones in the past have been on purpose, and all in between. What went wrong at Macy's, and how can companies prevent similar issues? And what are the lessons that we can take away from big failures like that?
Yeah, I don't know. I don't know if I can even speak about Macy's. I've never got to a level to be like, so obviously it's a great brand. But I'd like to think that if I take a step back, Jeff, and if that makes sense, I think overall the assertion is that if I'm using automation in processing or whatever, the concept of checking everything is less common. I'll give you an example from our personal life, if that's okay.
Yes, please.
We are like good consumers of credit cards. We have multiple credit cards in the family. Maybe you do, or our listeners, right?
Sure.
How many of us go through each and every transaction to check it? Of course, it's our money. We don't need to do it. We
Right.
actually, in our prior life, we built a company that did that, and we sold that to Intuit. And the idea was that you can take a set of heuristics, just like we're doing in SafeBooks. It's more complicated, but trying to simplify it. You can take a set of heuristics apply them to the data, and help you validate your credit card charges to make sure you don't have a fraudulent charge or a double charge. One time I remember I used our own application, which we used to call Check. And I remember I went to a store, it was a Radio Shack, and the guy at the front, he thought that the terminal was not working. So he said, let's go to another terminal and swipe the card again. Turns out the first terminal worked and I was charged twice. When you charge twice in a store, you would never pay attention. A day after, our software, our mobile app, I got an alert, you've been charged twice. I went to the store, remember that, and he credited me. But I think how many of us apply it in our personal life? Now, of course, in our personal life, maybe these charges are sometimes small, or of course, we don't have a legal liability to do that, unlike in the enterprise. But in the enterprise, back to your question, I think it is essential to use automation to validate the data. And I think what happened at Macy's was based on the facts that they've shared is again, you have an accountant, you have a talent shortage. That's obvious. Everyone suffers from the talent shortage, right? You can see a Bloomberg story about a year ago talking about 380,000 people missing in the industry right now, 384 to be exact. But we have a talent shortage. You're trying to throw a lot of manual activities at people. And when you have a single, again, point of failure where someone is responsible for something and someone else doesn't check him, because again, we said before that the notion that everything has to be double checked, that's the essence of finance. Actually, that's the law. The law, that's what Section 404 in Sarbanes-Oxley is all about. Everything needs to be done and then checked. It's called internal controls over financial reporting, and also suspicious activity. But everything has to be checked. And when that notion does not exist, or you're just suffering from not having enough bandwidth or people or whatever, then things like that will happen. By the way, we know about Macy's. What we don't know about is, I'm sure, thousands or tens of thousands of other cases which didn't end up with $150 million understatement of expenses. Maybe it was 20. So it's not material, but you still leave money on the table. The audit committee hears about it. So it's an unpleasant situation. The board needs to hear about it. Maybe you include something in your reporting. But if it's not material, it's still painful.
Yes. Yeah, it's still money related for sure. Looking ahead, I think the role of the CFO is changing, especially as there's more and more technology, more AI. What emerging trends do you see, and maybe emerging trends and technologies? What do you think will have the biggest impact on financial data governance and corporate finance overall, say in the next 5 years?
I think, first of all, let me quote Gartner. So Gartner just released a paper before or after the holidays. Really, that paper was before the holidays. And they talked about the top 5 priorities for the CFO for 2025. You can search for top 5 priorities of the CFO for 2025. And the number 1 priority is data governance. That's their number 1 priority. We actually were very excited to talk to them about that after the fact, after we saw that paper. And I think that a company having so many systems, they have to adopt. By the way, we focus on financial data. There's a bunch of other data which is not financial data. Customer support, it can impact financial data, but it's not core financial data. So I think what Gartner talks about is the fact that the company needs to adopt some kind of a policy for data governance, how data should be checked, how should be validated, and they recommend that the CFO will be involved in that. But I'd like to think that unparalleled to ever before, we're witnessing today a democratization of systems. 20 years ago, we used to grow on the notions that ERP will do everything. It doesn't exist, right? And just like in the engineering or other worlds, right? Now you have an ERP and you also buy a procurement system. And as you said, of course, you'll integrate it to the banks, but you also have or you're using billing systems, you're using a CRM, you can use multiple payment gateways in a company. You can have different legacy systems in the companies that generates the business. And you can have like travel system or T&E, travel and expense reimbursement systems, right? So you have that payroll, HRIS. So I think the list of systems, especially in a world where I'm sure you've heard it before, we are being encouraged to develop more and more vertical SaaSes that solve like a single problem, and you just have to buy more system, which each of them is focused on a problem,
Yep.
then I think the problem or the opportunity will get larger because the office of the CFO will find itself buying more and more systems. We just talked about data processing automation. So you'll buy probably something for that. So you'll buy more and more system, which will require you again to enhance your data governance capabilities, hopefully using automation. So I think that's the trend we're going to see. We're going to see more systems. By the way, Jeff, I think all of us are using way more tools than ever before. If you'll
Yes.
count how many applications we have on our phone versus 10 years ago. 10
Right.
years ago, 15 years ago, maybe you had 10. Now we have like maybe 100, right?
Yes.
So all of us are adopting not technology, but we're adopting application or very laser focused applications or tools rapidly, including in the business, which will require us to, again, enhance and even do a better job at data governance.
Yes. Yes. That makes a lot of sense. It's fascinating. And I think you're right on point about the future. Where can people learn more about SafeBooks AI online?
So I'd like to think, our website contains a lot of content, and that's because it's interesting when we talk to companies, each company relates to the pain in a different way. Some companies relate to the pain. The most sensitive area is the order to cash area, the top line area, the revenue area, billing area, collection, all of that. But when it comes to public companies, you need to have controls all over the place. So we're seeing, for example, and that's interesting, a lot of sensitivity around T&E, the travel and entertainment expenses,
Yes.
because what happens there. So again, there's a lot of tools, a lot of choices, and those tools have been designed over the last few years to be super employee friendly because every employer wants to give his employees the best experience possible. So even when they need to travel, so a great software and hopefully that helps you save money and get the best options and all of that, right? However, by in the process of doing that, companies to some extent focused more on the employee experience and making the employee experience very seamless, very easy in terms of how you book travel, how you expense travel, and all of that. And companies like Navan and Travel Perk have done an amazing job at that. But public companies also have policies, and if you think about it, mind me for saying that when we've seen some very noisy CEO terminations, a lot of them have been around T&E policies, right? They
Sure.
expensed things they shouldn't have expensed, whatever. So the company's ability to apply compliance over T&E is limited and restricted because everything is geared toward being an employee friendly. So if you're trying to make the workflow really easy and you don't require the employee to answer a gazillion questions around does it meet this part of the policy or that part of the policy, then using AI to be able to validate and apply the controls without the involvement of the manager or the employee himself allows you to both avoid bad behavior and also be able to say that you checked everything, that you actually apply the policies of the company. And companies are super sensitive to that. And I think we've been getting like multiple requests to use our platform to automate that area. So we've built, again, AI-powered solution who knows not only to read the data, but to read the descriptions, to read the explanation people put on their expense report, and be able to vet it and say whether it looks okay, or if it doesn't look okay, you escalate it. But then the organization can say, you know what? I'm now scanning 100% of the transaction.
Yes.
95% is vetted by the machine. 5% is escalated for like a manual review, which we either sign off or investigate. We are employee friendly, and we are also enforcing our policies and having controls on this very sensitive area.
That's really smart.
I hope I didn't offend anyone, but it's really a sensitive area for companies. And the larger the company gets, less control they have on even,
Yes.
look, even like a simple policy. Don't use your peak out for IT equipment. If you need to buy an IT equipment, go to the IT department, right? Don't use it. You can use it to buy coffee, to have a meeting in a coffee shop, not to buy an iPhone or whatever, right? So the ability to apply these controls over the T&E data without harming the employee experience, or that's something we're doing.
So good. So good. Let's wraps up our time today, and so informative. And I love the ability to get 100% compliance, and data validation is so important, especially as companies get bigger. Such a valuable tool in the marketplace. And thanks for being on SaaS Fuel. This is great.
Thank you, Jeff. It's been a great pleasure to be with you. Take care.
Thanks again, Ahikam, for coming on the show and sharing your journey and insights. You can learn more about Ahikam and SafeBooks at safebooks.ai. As always, all links, highlights, resources, and full show notes are available at saasfuel.com. And be sure to check out our YouTube channel as well, where you can actually see what's going on, full video episodes, along with shorts, training, outtakes, and quite a bit more there. Thought leaders share. Share this episode with that friend who blames Mercury retrograde for their terrible life choices, but never their bad budgeting. Anybody else know somebody like that? Everyone who shares this week gets an AI powered astrologer that sends automatic email responses like, "Sorry for the delay, Jupiter was in retrograde." So you never have to take personal accountability for anything again. Yeah, no founder would ever use that. No successful founder, anyway. What if your paid ads could deliver consistent, real ROI without the headaches of disapprovals or account suspensions? Join us this Thursday as John Horn, CEO of Stub Group, reveals his personalized approach to ad management that helps businesses achieve sustainable growth. Super important. And sometimes your ad account gets banned and goes sideways and you don't even know why. So that'd be a great one. And then what if your SaaS business could scale globally with a seamless payments infrastructure? Join us next week on our founder episode. We'll be joined by Lucas Lovell, VP of Product at Paddle. He reveals how digital software companies can optimize payments, navigate global sales tax complexities, and man, are they complex, and increase conversion rates through localized strategies. So much good stuff with Lucas. So I'll see you next time. And as always, enjoy the journey.
Thanks for listening to SaaS Fuel. Full show notes for each episode, which includes a summary, key takeaways, quotes, and any resources mentioned, are available at saasfuel.com. Be sure to follow and subscribe wherever you listen to podcasts. And if you're enjoying the content and getting value from these episodes, please leave us a rating and review at ratethispodcast.com/saasfuel. We'll be sure to read these out on future episodes.